Okay, so welcome to the 28th day, if I'm not mistaken. So it should be the 28th day of this YouTube mentorship. Um, Today we're going to talk about a very important topic. If you have not gone through the last videos, those who want to go through it, they're all in one playlist, right? All the mentorship episodes. Yesterday we talked about market mentorship, and we have been on a journey, right? If you're not following me on Twitter, do want to follow me because that is where I post most time. If you want to really follow me, just follow me at Twitter. It's my handle. So just follow me on Twitter so you can get my updates. If you want to get giveaways, all those stuff, just follow me on Twitter. That's my X handle, right? So that's also called Twitter. So just do want to give me a follow if you haven't, so that you can always get updates from me and all of those things, right? So today we're talking about high probability order blocks or high probability POI. All right, so let's talk about. So this is a very important topic. Let's also talk about order blocks, right? So many people don't know how to choose order blocks, right? So we also talk about high probability POI. POIs are not only order blocks, right? We also have POIs that are in form of imbalances, breaker blocks, key levels. I didn't talk about key levels, SLK. I didn't talk about key levels. That's something I may not be able to cover because of the unique nature of that. So I didn't talk about that. Right? I didn't talk about key levels. So let's just leave that one for now. The things I've taught you guys are very sufficient. All right, so let's talk about high probability order blocks. How do you select high probability order blocks, right? How do you choose high probability order blocks? This is a very, very important topic and something that you ought to know, because one of the most important things that you can do as a trader is being able to filter your entries, choose the ones that have more odds of panning out, right? So the issue with a lot of traders is that they don't know how to select order blocks, right? They just choose anything like order block, right? They just enter their charts now. This is what I did too. Just be marking everything as order block, right? Like now, they'll be like, okay, order block, they'll sell inside here. Everywhere is an order block to them. They'll say, okay, order block here, they'll take a sell. They mark another order block here, they'll take a sell. This is what means traders do. They mark an order block, they'll take a sell. They'll mark another order block here. There's another one, they'll take a sell. So this is what means traders do, and they get caught up in these kind of things. All right, so now they have marked three order blocks in this single chart, and all other blocks failed. All right, this one failed, that one failed. So they're taking three losses. All right, maybe they even took this one too. They said, okay, this is another block. Early in the morning, they took this too. So they say they've taken four losses because of what? They don't know how to select other blocks. Right, this is one of the issues a lot of traders struggle with. Right, they struggle with selecting their right order blocks. Right, so it's essential to know how to filter out other blocks, to know how to choose the ones that are high probability. Right, now the first thing that I do when I'm choosing other blocks, right now, before I say anything, choosing the right order blocks is not something that would, it's not something that will guarantee 100% win rate. It helps to reduce losses, right? If you're taking, let's say you take 10 trades and you lose 8, and now you're able to lose maybe 5, you see that your win rate has increased. So high probability order blocks will help you to increase your win rate, thereby increasing your profitability. But it doesn't mean that it's going to eliminate your losses, right? Being able to choose high probability order blocks doesn't mean that you won't take losses, right? Doesn't mean that you won't take losses maybe once or twice. I do take losses. Everyone take losses, right? I take losses. I showed you guys my account yesterday. My account that was due for payouts. I have a payout coming on Monday on my live account, and you could see that I took some losses there. In fact, I took a lot more losses than wins, but my wins were always big enough to cover up the losses. So that's how trading is. You want to take those losses, so it's fine to take losses. But what matters is that you're still being able to trade profitably, right? At the end of the day. So now, how do you choose? Now, the first thing that you must pay attention to is that you should avoid Asian range order block, right? So avoid Asian range order blocks, right? So these are the ones you must avoid. Avoid the ones that are high. If you can avoid this, you're in a good hand. Avoid other blocks that form in Asian range, right? Because they have a very low probability. Now, Asian range, I've told you guys Asian range is between what? 8 o'clock. It's between 8 p.m. to 12 a.m. New York time, right? This is Asian range, right? So this is Asian range. So I use this blue tool to help me identify Asian range. So other blocks that form in Asian range are low probability, although sometimes they play out, especially on pairs like GJ. Pairs like GBP, JPY, those Asian pairs, sometimes those it plays. But on USD pairs, GBP USD, Euro USD, right, you should avoid Asian range OBs. But pairs like GJ, sometimes because of the yen, because of the Asian components, it plays out. So we should avoid other blocks that pan out or that forms in Asian session, right? Asian range, not Asian session, right? Just like this other block, like today now, I've seen this other block that's printed there. And this other block was printed what? In the Asian range, right? So there's very like odd or likelihood that this market is going to push through this other block here, right? So avoid other blocks that form in Asian range, right? Avoid them because they have a low probability of holding, right? They don't really hold, right? You can see this the market was kind of bearish. You can see this bearish order block here. Can you see how market breaches so easily, right? See, you see that? So you should always avoid Asian, Asian range order blocks. Avoid Asian range order blocks because they don't tend to hold, right? You can look at this one here. Can you see it? Markets push down, but still was breached. So those other blocks from Asian session are usually very low probability. So don't trade Asian Asian range order blocks, right? Number two, the second thing is that work with extreme order block, right? What do I mean? So when you're in a trading range, right? If you're in a trading range, right, you have your lower high, your lower low, lower high, lower low, right? Always work with the extreme range order, the extreme one, which is what this one here, right? The last order block was the one that you should work with, right? So I think I should just put something. So extreme unmitigated order block. So work with what is extreme and unmitigated. So now how do you know order block has mitigated? You know it's by what? A tap. If price hasn't tapped into another block, it's not mitigated. Right? Like now, look at this now. This is a extreme order block, right? Now, this order block you see here, can you see that price did not tap into it? Price left it untouched and then went higher. So the other block that was untouched, like market did not tap into it, sort of called unmitigated, right? Why the one I this one now? This one hasn't tapped in. Look at this one here. Look at the other block here. It hasn't tapped in. So market came back, tap this one. That means this one has what? Mitigated. But the one below is unmitigated because why? Because price didn't tap into it. Well, this market was bearish. That's why it breached it, right? So don't, it's just very important. So work with extreme order blocks. The ones that are in extreme regions, like extreme, right? Those ones are in extreme regions. They are more likely to pan out, right? Now, the third thing that you must play is that number 3, work with OBs, that's other blocks, in line with trend, right? This is one mistake many people make. The market is bullish and I'm trying to buy to sell with other bearish order blocks, right? This is one mistake I many traders make, right? It's very, very important. When you look at the trend on the market, always trade with the other blocks that are in line with the trend. The market is bearish, look for the bearish order blocks. The market is bullish, look for the bullish order blocks. Right? Don't be doing the opposite. It's very important because if you're doing that, you're going to really, really get hot, right? Imagine this market was dumping and you're busy trying to buy this. Well, look at what we have taken. You're also taking losses, right? So always work with the other blocks that align with the trend. Right? Look at this extreme order block. Can you see how market came there? Can you see it's extreme order block? Very nice move here. Although it's swept below and still closed above it. But it was a very nice one, right? So this kind of things happen, especially when we enter a new day. This other block formed on Monday, 28th of October. You can see how price swept below. So always be mindful of other blocks that form a day prior or a day before because this kind of things can happen. So now let me say this. Whenever you have an order block that formed in the previous day, always wait for a kind of confirmation, right? Because this other block formed when on Monday, and this happened on Wednesday. That's yesterday, right? So you have to be very mindful of this kind of order blocks. Order blocks are formed a day prior, like a day before, 2 days before. Always wait for some kind of confirmation because price might want to run it as soon as of a previous day liquidity grab, right? So this was in line with the trend for current trend, but you have been wiser. You waited for a confirmation because this order block formed a day before, right? So it's always wise to wait for confirmations when the other block formed a day before. So I've kind of said it now. I don't need to add it to the rules, right? Be mindful of other blocks that form a day before, right? Because they can be used as liquidity. So just be mindful of them. Wait for confirmations for that, for you to use it, right? Then number three, or number four, another way to select other blocks was use other blocks imbalances, right? The ones that have imbalances to close to them, like these are not that have some kind of imbalance, right? Those are the ones we want to use, right? So now, let me add something. So what we want to have imbalance and displacement. So when we see other block that has some kind of displacement, what do I mean by displacement? I mean other blocks that when it occurs, it moves price. Like look at this, I can look at this other block now. As this other block printed there, can you see how markets move quickly? So that's quick movement is what we refer to as what displacement, right? So we refer to that as quick movement as what displacement, like the markets move quickly from the other block. And then imbalances, so when you see imbalances around the other block, right? This is one of the ways to select another block, right? So when you see an imbalance that is created by the other block, right? It's going to make it high probability, right? Imbalances, you can see how that's a similar block had an imbalance. Can you see the imbalance it's created? Although price swell below because of some kind of liquidity graph. This is how many pips? 39, this 40 to this is just like 2 pips drop, or let's say 2.5 pips. Right? If you use white stop loss, maybe they'll still be nil. Right, but those other people that have imbalances and that have some kind of displacement are what you use, right? The ones that have imbalance. Remember that they use one that is extreme, right? If you have 2, 3 other blocks, use the one that are extreme. Like now, let's assume that maybe you want to catch this sell, right? The best other block which you have used will be this extreme one here. This is extreme other block here. This one here, right? There's no need trying to sell here, right? No need trying to sell here. No, although this would have been a loss, right? I'm not showing you how would have used it. Right? No need to say that this solar block. I use the extreme one. Right? The extreme one is usually the one you should use. The extreme. No need to sell there. They won't come and sell there again. No point doing that. But I simply waited for price to come with the extreme one here and then took yourself from the last order block there. Right? So always use the extreme one. Right? Don't use the one that's in between. Right? And I use one that has, you can see displacement. Can you see how after this order block, can you see this heavy down candle? Can you see this big down candle? So that's what we call displacement. The market is moving with energy to the opposite direction, and you can see what the imbalance that was created. So this was a very good example. Was a high probability, although it did not hold for some reason, it didn't hold. But can you see how this whole thing happened, right? So what was referred to as what extreme was order block, right? Extreme was order block, right? So after this liquidity grab happened, look at what happened there. After this liquidity grab happened, right? This is not a liquidity grab. So markets made another order block here. Market was bearish, right? So if you watch carefully, there was actually a break and there was another block that was made here. So there was a single candle OB here, right? This last up candle was OB. Then if you move it, you can say, okay, that was the OB. That's extreme one there. So markets came back, tapped into that extreme order block, and then it's market dropped down. Right. So these are also scenario. This was long though. Jeez, got a long week. Mad. So markets came back with the other block and then what dropped down. But someone asking me, sir, why using week? Now, there are two ways to use other block. Either you use candle bodies or you use the last, like now. In this case here, this candle swept liquidity. Like you can see this push up. This candle swept liquidity of the previous candle. So the best way to use the other block is to use this one, right? In cases where you can see a very clear liquidity sweep, use the candle that swept liquidity. Don't use the body of the candle. Like some people say, okay, it's the green candle. No, not really the green candle. The other block here is this one that swept liquidity because you can see how this whole move happened. That's what other block. Now that's how I choose other block. Or I always look at the liquidity graph to know how to select. Like, look at this example now. This is other block because this candle saw liquidity, right? You saw liquidity, you probably was pushing to the downside, right? So either you do that or you cannot smack the whole move. You can say, okay, from this candle body up onto the upward. So it just depends on how you see fit. Either you choose from this last candle and you see how to cover that liquidity gap, right? Or you choose the exact candle. So anyhow you do it, you see correct. Just back test. The both of them, I've tested them. Candle bodies work. I've tested and seen that if you use a candle body, like the body of the candle, if you use this wiki candles too, it also works too. So I've seen that both of them work. It depends on who is using it and how you use it, right? So that is very, very important to note, right? And then another thing I must also notice that other blocks that have liquidity grab also high probability. So the ones that have liquidity grab also high probability, right? Number five, other blocks with liquidity grab. So you want to see one of liquidity grab. This was also very high probability too. Because there's some other blocks that don't have liquidity grab. So the ones with the liquidity grab are usually high probability, right? Number five, OB with liquidity grab. This was a very high probability. Right? Those ones are taking liquidity. Right? Look at a very high probability. Right? Those liquidity grab other blocks. Right? So there's usually high probability. Right? The one that take a liquidity, like you can see push below a low or a high and then take a liquidity. So those are what we call high probability. You must see some form of liquidity grab to make it high probability, right? So let us look at just some examples on Euro USD. Right. So my God. Sheesh. Let's go to a high time frame and this maybe 30-minute charts. All right. So wow, this was beautiful. All right, can you see? Let's just take out this drawing. All right. So can you see this last order block here? Can you see liquidity grab? And look at this. Can you see this candle? Can you see the other block there? Now watch something. Can you see that there was an extreme order block? After the market broke through, because this order block was in line with the trend. Why? Because there was a market structure shift to the downside. Market structure break. That's the BOS here, right? And then can you see this was the extreme? Can you see displacement? Can you see this big down move after this order block was printed? That's what we call displacement. And not only displacement, can see what imbalances that were made by that other block, right? And it was at the extreme end. So what we call high probability. Markets came back into the high probability order block and then dropped. Can you see how this one has formed around Asia did not hold? Can you see it? If you saw there, you say you're taking a lot because this formed around Asia. And Asia block other blocks and not other blocks should be messing around with on London pairs or Euro USD pair or USD pairs. Can you see how markets came to the extreme order block there and then we can see what this heavy drop, right, to make it what a new low, right? So that is how this is print. So this is print, right? So this was a very good example of what an extreme order block. This was in line with what the trend, right? It was in line with the trend, and then that was so that is basically how these things are printed, right? So that is it. This happened before the market finally changed and became what bullish. All right, let's look for another example and see if you can spot it. Remember, it has to be in line with the trend, right? It has to be in line with the trend. All right. It has to be in line with the trend. Don't just take other blocks just like that. It has to be in line with the trend. Trendy other blocks. All right, look at this one here. I see this extreme other block here, right? Which was in line with the trend. Can you see how this other block took a liquidity? You can see this big imbalances here, right? So you can see how price came back into the other block. You can see how it dropped nicely, right? It dropped. Although it took some time, maybe we are waiting for some kind of confirmation of the lower time frame, right? So that was a very nice example of an extreme case of that. Look at where Asia failed again. Can you see how this Asian order failed? How markets around the Asian order and then drop. So be mindful of Asian order block, right? They're not high probability, right? So that is basically it. So that is how to select your order block. Right? Just do it to back test. Look at this one here. Extreme order block. You can see how markets came back, tap into it, right? And then drop down. Right? This order block took out Asia liquidity and then drop down. Right? But this was not the extreme order block, right? Look at what happened there. Ordinarily, if market was price was able to take out this low, right? If we saw a good below this low, maybe if market is something like this, right? Market is something like this. When I work with this is the extreme order block here. I work with this higher one. If the market was able to take out this low, but the reason why this held is because this low wasn't taken. So price was trying to take out this low. So this one held, just went back, tap into the network, took out this low. But if this low was already taken out, it's more likely that you would have seen price come for this extreme push up here, this extreme one here. Right. So just be mindful of that. Sometimes the price doesn't take a liquidity, it can choose to go for the closest order block. This acts as a wall to support price downward movement. Right. So that's a very, very good case of an extreme, a very good order block, right? Another one here. Casa market took out this low, extreme order block, this one here, right? So Any high dates you have done, maybe mark the whole move, right? Markets came back and then dropped to the ground, right? Where is the ground? This low here, having your target, right? So that is obviously how this is spread. And you can say this was in line with the trend, right? So look at this big news candle, right? Because this is NFP. So this candle has not been filled properly, right? So let's see what happens in the coming week, right? So this is just an example how you can just, select your high probability order block, right? Just do it to backtest this information. So the things I've given you in the GPUSD chart, you have to filter out your order blocks and all those fun stuff, right? That's just basically how you do it, right? Just work with these things, right? You can also add your rules. Just see the secret of these things in backtesting. When you backtest, from this I taught you, nobody taught me. I just use backtesting to know some of them. So if you backtest, you have to know this one is high probability or this one may likely not hold you, all those kind of things, right? So now this security grab also have to mention something here. You can also use other brother. Security grab it could be also in form of session, right? Like it could have this is also a bonus. Sometimes other brothers that that happen after the previous session liquidity was taken are also high probability. Like now we enter into New York session and price takes a London liquidity. That other brother that took a London liquidity is also high probability. So sometimes if you're a lower time frame trader, this is only for the people that are lower time frame traders, like trade a lower time frame, like 15 minutes, 5 minutes. You have to pay attention towards session liquidity. Once we enter into New York session, London liquidity graph can fuel your order belt to work for you. If you enter London liquidity, if you enter London session, price taken as Asian liquidity can be a very good fuel to to work for you, right? So the reason price took out this order was because this order was formed in what London session. Why this was what New York session, right? So whenever you enter into a new session, sometimes the orders on the previous session don't seem to hold, right? Always wait for order blocks formed in the same session you're in. If you're in New York session, work with order blocks formed in New York. If you're in London, wait for order blocks formed in London because sometimes it can take you out because of it's trying to take a liquidity from the previous session, right? So I hope you guys understood that. If this makes sense, just type makes sense, makes sense, makes sense in the comment section, right? So I'd love to see you guys tomorrow. Have a wonderful day and God bless all of you for watching this video.